talk about covered calls. Covered calls is when you sell calls using shares of collateral. You use 100 shares per call as collateral. This is generally considered a conservative option strategy, though the gains on it can be quite large. I've traded underlyings where I can make about 1 to 2% a week with this, though those are rather high risk. The concept of this strategy is pretty easy, though the execution can be harder. We do this to collect the cost of the contract, known as the premium. It generates income in your accounts, like your own little money printer. You might ask yourself, how can I do this thing? Sounds great. The good news is that there's only a few steps to follow, and it's not very difficult at all. To start, you need shares, 100 of them. Go ahead and buy those. Then you can sell calls. If you sell them immediately, it's known as a buy right strategy. If you wait for a price increase, it's not a buy right strategy, it's just selling regular covered calls. I like to use the buy right strategy when entering riskier trades to try to immediately generate some profit. There's really only 4 possible outcomes of a covered call strategy. 1, the option expires worthless when the underlying closes under the strike price on the day of expiration and stays under after hours. 2, you buy back the option using a buy to close order, preferably for less than you sold it for. 3, the option is exercised and your shares are sold at the strike price. 4, the option expires in the money and you sell at the strike price. Notice that if the option expires worthless, or you buy back the option using a buy to close order, you can just sell another covered call. Be careful not to sell covered calls under your cost basis. The biggest danger is that your underlying can decline in value so far that you cannot sell above your cost basis. We have some time for some general advice. Start by using ETFs like SPY. There are cheaper options out there like PSP. If you can't find a good ETF to trade, go with some low volatility, low price tickers like Nokia. Don't go looking for high premium stocks. It very rarely works out. I know you're going to try it anyway, but don't. If you didn't follow that advice, don't be afraid to cut losses. Go ahead and take that small L rather than a big one. I wish you all luck on your hunt for big gains. Go ahead and check out these other videos. They're pretty cool.